This is Carl Dahm with the Real P&L channel. Welcome to lesson number 3 of my 8-part series, Stocks versus Options. If I had most of my net worth tied up in a blue chip stock portfolio, I would not sleep well at night because that portfolio is too risky. I have been studying passive income for over 30 years, and a modern options portfolio is the most conservative passive income vehicle I have found. A modern options portfolio not only reduces risk, but also provides higher returns when compared to the market. A modern options portfolio is made up of options positions that follow the 12 principles outlined in my new book called A Portfolio for All Markets. Now let's get into the differences between stocks and options. There are 8 key differences. 2 of those differences actually favor stocks, and 6 of those differences favor the modern options portfolio. Next, I'll go over options advantage number 1. Options advantage number 1 is direction. To make money trading or investing, what is the most important thing you need to know? To be successful, you must pick the right direction of the stock or underlying. You can go long and hope the stock goes higher, or you can go short and hope the stock goes lower. Picking the direction of a stock can be a challenge. Not even Warren Buffett can pick the right direction of a stock. If he could, he would have never been down $3.8 billion on Apple. He would have just waited and bought Apple later at a lower price. There are a lot of gurus out there claiming they can pick the right direction of a stock. I've been around for 26 years and I haven't met anyone that can pick the right direction of a stock and be able to beat the market doing it. If you're out there and you're willing to show your P&L, I'm open to learning how you do it. I highly recommend a book called A Random Walk Down Wall Street by Burton Malkiel. In the book, they tracked 548 stocks that were on the New York Stock Exchange. They applied 32 of the most popular chart patterns in order to pick the direction of the stocks. The performance of the buy and sell signals was compared to the performance of a normal buy and hold strategy. After all the research, there was no relationship found between the signals and subsequent performance. So what does direction have to do with a modern options portfolio? A modern options portfolio profits regardless of direction. If the market goes higher, you make money. If the market goes lower, you can make money. If the market goes sideways, you can still profit. Wouldn't it be nice to not worry about a stock or the market's direction and still be able to make a profit? So just to recap, the modern options portfolio versus the stock portfolio. Number 1, we had liquidity, and you have to give the edge to stocks. Number 2, we had trade execution. And if you trade options with single ticket orders, you were able to make stocks versus options. That's an equal comparison with trade execution. And third, we just talked about direction. If you don't have to pick a direction, that definitely gives the edge to options. If you feel like you've learned anything from this lesson, please subscribe, hit the like button, and the notification bell. This will promote the video on YouTube and provide opportunity for others to see it. If you're interested in watching a modern options portfolio in real time with P&L posted daily, then subscribe to the Real P&L channel. Stay tuned for lesson number 4 of my 8-part series, Stocks versus Options. Lesson number 4 covers diversification. Can an options portfolio be more diversified than a well-thought-out stock portfolio? Most investors don't understand how to even evaluate a portfolio for diversification. Lesson number 4 will cover this topic in detail.